Eric Mother.com as we continue with our series on the VIX being above 20. Let's take a look at what happened. Now this video is being recorded the next morning after the previous video discussing the VIX being above 20. See what the markets are doing. In fact, it's been an interesting session earlier in the pre-market. Right now the market is open for about 15 minutes. The Dow was down as much as 450 points, gapping down almost more than 2.5% at the open, something in that range. So we see that when the VIX is elevated, we can go back and take a look at the short-term charts. And because we had looked at those at the end of yesterday, so this drop at the open is pretty interesting because it goes back to our charts that we were looking at, and we can see for now that all the charts we were watching for a reversal can now clearly confirm this. We can see that on the Nasdaq hourly, and here again RSI period of 14. We can see that at the highs of yesterday the market tagged that, and of course now it's down 2% the next morning. In fact, at the very open of the next morning, which is consistent with our resistance analysis at the end of yesterday, at the highs of yesterday also. We can see here also on the Nasdaq 30-minute chart, and here again we have RSI period of 14. We can see that this is where the market has been struggling since the break of the level there in late December. This has become resistance level. This same line, once you extend it, has become resistance. So we can see that is evidence, and we can see as we move below the 50 level, we get this big drop because you're moving back below 50 and your VIX is elevated. As you can see here on the VIX trading at about 27. That's a very high VIX, which means short-term charts should be predominantly be used by those who trade the market on a short-term basis. So continuing on here, we take a look at the Dow 30-minute chart or the Dow hourly. And on the Dow hourly, just the same analysis. We came back to test the break line, and of course we failed. And as we move below, after that resistance is when we get this huge drop of 2% drop the next morning. Take a look at the 30-minute for the Dow, and we can see here also same type analysis. Now on this Dow charts, I'm using RSI period of 26. So on the RSI, it's a little bit of a difference, but you can see also same analysis here. We did show resistance, and as we moved below 50 at the open, we had this big drop. So as you move below 50 or above 50, you get a big swing. Here we are moving below 50 on the hourly RSI, hence the reason for a big drop. Let's take a look at the S&P 500 hourly, and of course it's the same. We can see that the line that was a previous break line was tested as of yesterday's highs, and now we are looking at a major drop at the open. So that is consistent with that analysis. Now for the day, what one can do is, for example, if you take a look at the S&P 500 and you're trying to gauge how much of a down move this might be into the close. Remember, this is early morning trading, so we take a look at the daily to gauge how low this can go, and it all depends on whether the S&P 500 is gonna trade below 30.9. If it trades below 30.9 by the end of the day, expect a bigger down day than the current about 1.8% drop. So that's the key. Is it gonna hold below 30.9? If it does, that's a little bit concerning in terms of how much of a drop this could end up being. Take a look at the Dow. The Dow right now is trading at 30.93 currently, which means that it could easily drop back below. Right now it's trading at 30.93. It could easily drop back below 30.9. If the Dow stays below 30.9, expect this day to be down into the close. Take a look at the Nasdaq, and the Nasdaq right now is trading well below 30.9. So here what we can see here is based on the numbers, because one of the major averages is below 30.9. The risk is that if one of the major averages stays below 30.9, it might drag the Dow and the S&P 500 lower into the close. So right now we can see the Nasdaq is down about 100 points. If it stays below 30.9, expect the Dow, which is currently, let's take a look at the Dow. Let's take a look at the Dow here. The Dow currently is down about 333, okay, which strangely enough was at the highs of yesterday. The Dow was up 333, and now it's down the next morning minus 333. because of that hourly resistance. Why? Because we have a major move in the VIX staying above 20. So anyway, what I'm getting at here is if the Dow also drops below 30.9, expect this to be a bigger drop than the current 333 points, which might suggest that S&P 500 might be dragged lower. If S&P 500 also has to go lower, it means that the markets are going to be substantially lower from current levels. Let's take a look at one more, which is the Dow Transports. The reason why I want to bring them up is Dow Transports have been bearish over the last year or so, or at least leading the market lower. And here the risk is that the Dow Transports continue to trade below 30.90, which means that the energy is very bearish. And because one of these major averages is below 30.90, chances are we are not going to see a big bounce until all of these major markets, the transports, the Dow, S&P 500 and the Nasdaq, until all of them are back above 30.90. For now, the risk is pretty much to the downside. Eric Mwadid, Mwadid.com. I'll keep you posted. Good luck, peace and blessings. EACS.